Buoyed by the jump in prices of raw sugar in global and domestic markets, the shares of major sugar companies have been doing well for a while now. Listed domestic players like Balrampur Chini, Dalmia Bharat Sugar, EID Paddy, Uttam Sugar and Sri Renuka Sugars have surged in the range of 12 to 26% in the past month, as against a 5.9% rise in the S&P BSE Sensex during the same period. So, what is the trigger behind this upside in sugar stocks? Analysts attribute 0.4% year-on-year fall in the world's top sugar-producing country Brazil's shift to ethanol production due to cut in crude oil output and erratic weather conditions.
Sugar stocks also rise temporarily. Now sugar prices are rising. They are up 7% in 3 weeks. Prices are at 11-year highs. The present price rise has been triggered by lower output of sugar. Globally, the lower output has been caused mainly by poor European crop. The recent decision of OPEC Plus to cut crude output also has led to lower sugar output due to diversion to ethanol production. In India, extreme summer and unseasonal rains, particularly in the largest sugar-producing state, Maharashtra, have also contributed to lower sugar availability.
In terms of domestic sugar production, sugar industry body ISMA slashed output estimates to 328 lakh tons for the current marketing year ending September from an earlier estimate of 340 lakh tons. This revision came after production fell in the country's top sugar-producing states Maharashtra and Karnataka due to uneven rainfall. Against this backdrop, domestic sugar prices have zoomed past 8% so far this year. Globally too, sugar prices have seen an uptick of over 30% to 4,803 rupees per kg. Going forward, will this upcycle remain in place or a break is expected on the horizon? Here's what analysts say.
We believe that the domestic sugar prices will remain firm. One, mainly on account of lower supply in the global market. Second, Indian production, which was earlier anticipated to get around 34.5 million tons for the current sugar season, it is now expected to be around 33 to 33.5 million tons for the current sugar season because of the drop in the production in the Maharashtra. So we believe that the domestic sugar prices would continue to remain firm. So that will help sugar companies to post better realization for its sugar business.
From an investment perspective, Pavaskar of Sharekhan recommends Triveni Engineering and Balrampur Chini for the medium to long term.
Preferred picks, one is Triveni Engineering and Industries. The company has sugar production happening in the western part of the UP where the impact of the unfavorable season is quite less, so we should expect better recovery and sugar stock for the company. Also, their engineering business has recovered well from the COVID disruption, and now it is back on track, expected to perform well. They are also expanding their distillery capacity, and the ethanol division is expected to perform well. So overall, Triveni Engineering is expected to do well. Balrampur Chini is one of the top players in this space. It has one of the lean balance sheet, and also its ethanol and sugar business is expected to do well in line with what the other sugar companies are likely to post.
Overall, analysts expect sugar companies to benefit from rising prices and recommend investors to adopt a stock-specific strategy. Meanwhile, on Tuesday, the US Federal Reserve will begin its two-day policy meeting. Back home, Q4 earnings will sway the markets.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.